Welcome back. You're watching Dealing Room. 10,424 on the screen is what we've got on the SGX. It's going to be a fifth straight day of gains coming in for the markets. Asian markets are looking good, with most of them trading with a gain of nearly 1%. And the Dow futures are also up about 1.5%. We've got with us Jay Gupta, who joins in to talk to us about the fundamental view on the markets. Ashish and Srikanth will also join in just a minute. Jay, I'll come to you first. After, of course, the budget, we've had a very, very rough ride on D Street. So be it LTCG, be it Trump's trade fears, be it geopolitical tension, rising crudes, higher rates, you name it, and the problems have been evident. But finally, there seems to be some sort of sanity that's been returning to the markets over the last 8 to 10 days. Do you think the worst is now behind us? We're out of the woods because resolutions are in place, and it seems like the general sentiment is one of being positive.
Correct, yeah. So if you talk about the worst in the current context, I think the most of the bad news is already priced in domestic, if you talk about Indian markets, but there will be global headwinds that will continue to be there. For us, it's not like just go all out and start buying, but you need to be very stock specific. You need to select sectors. You need to identify companies where there is earning visibility. So obviously 2018 is going to be a very volatile year. So it will not be a straight ride as it was in 2017.
Do you also think that a lot of the selling has been abated now because of the year-end capital gains phenomena that has now finally come to an end? And because if you look at the way things have worked out, you've ended March, and by the start of April, I think stability and the buying had started picking up, right?
Exactly. So until March, because of the LTCG impact, we saw selling. But in March, in April onwards, we are finding companies where the earning visibility is clear.
So double-digit growth expected, or that's pushing it now?
That's being too optimistic, I would say. But if you talk about companies like Bajaj Finance or companies like LIC Housing, in spite of the markets correcting, these stocks have outperformed. So we still believe that, again, I would reiterate, where there is earnings visibility, those stocks have continued to be on a buy side and they have performed.
So I agree, there will be some sectors that will give you a sense of recovery. There will be other sectors that will take away from the incipient recovery that we've been talking about. Consumer discretionary is, in the last couple of days at least, been showing signs of strength returning. Auto, select industrials are expected to post strong numbers. Metals may do quite well as well because prices are rebounding. Piyush, correct me if I'm wrong. So there could be some margin expansion. So those are going to be sectors that will do well. What do you think could be disappointing this quarter?
I think IT. The way today, Wipro raised an alarm about their earnings. And the way international markets may create some kind of headwind for IT companies, I feel IT would be a sector to avoid, I would, for this quarter.
What's the take on financials here? Because on one side, again, the news flow around the Axis Bank basically has been there for the last couple of days here. Now the tenure of the current MD, again, that basically has been cut till December. So now there's an argument here, and there are two sides of the coin. On one side, these stocks have been trading at far lower valuations compared to IndusInd, yes, and HDFC Bank here. On the other side, again, basically, there perhaps is a perception that there could be a sort of a succession risk here. You don't have the visibility here. Right. So how are the markets going to actually trade this? Is it a cause for cheer or is it a cause for worry here?
I think, see, the way the news flow has come, all of a sudden, we feel that there is kind of a leadership crisis in two of the premier private banks. ICICI Bank is facing this kind of issues. Now, all of a sudden, Axis has come into radar. So, entire banking sector, if you see, PSU banks have been a question mark. Now, this kind of leadership crisis we would put in, that creates some kind of pressure on the banking sector as such.
But don't you think the valuation multiples are already telling that the markets actually wanted some change in strategy, some actually change in the model or leader here? Isn't the market, shouldn't the market be happy here? That yes, perhaps the stock is trading at almost 50%, I should say, the valuation gap here. Basically, there should be some upside here, primarily because of some sort of hope that yes, something is going to change.
Right, but if you see, Axis Bank as such has not performed in last 8-9 years. If you compare with the peers like IndusInd Bank, who have given phenomenal returns, or Yes Bank, the stock has been underperformer even after Shikha Sharma took over the reins from PJ Naik. But if you see, maybe in the long run they would change their strategy or they would come out with a different kind of business model. But as of now, it creates some kind of question mark in investors' mind. So I would not be just going out and buying Axis Bank at this point, but I would rather wait and expect for some correction.
Right, that's the fundamental view coming on Axis Bank.